get down to the New York Stock Exchange. Jim Cramer joins us now. We're positive, Jim. I guess that was such a good GDP number. We should welcome that, but it does shed, or at least put the Fed moves and fiscal moves. We need to shine a light on these things, on how hot we really want it to get, maybe.
Yeah, we're in that good news is bad news period. And Dick Fisher said some unbelievable. He's so thoughtful. He was saying that Fed doesn't have a lot of room if it overshoots, and so this is one of those moments that what happens is that these machines come on, and when machines mean algorithms, and they just blitz any buyers. So I'm urging people to not pay up. You'll probably get a better price because there's some people and machines that just say you have to sell because of what the Fed's doing. It's really a shame because they're not distinguishing between good and bad, Joe. You know that. They're just selling everything.
Do you, I know you listen to Chairman Powell, take him at his word, but he's human. Do you think there could be a lot of pressure come to bear if they, I mean, we have big gains in the market over the year, but you know how it gets with just a couple of, like if it was 10, 15, 20%, do you think they still follow through, or do they use the wealth effect excuse to say, we're going to pause on the hiking? Is the put really dead, Jim? You
yeah,
tweeted
put's
it.
Dead. The put's dead.
Or way out of the money. Or way out of the money.
Yeah, I mean, I think he's really tired of anything that is excess. And what's excess in our market, obviously the IPOs, and we know the SPACs, the Cathie Wood stocks. These are all excessive, and they do poorly in this environment going forward, as Jonathan Gray did. I mean, Jonathan told it very good, really smart person. As rates go higher, and then we have lower PEs that we like, and you have to be able to have a buyback. You have to have a dividend boost. Who's doing that? Well, mostly the oil companies. So, I mean, we got in this situation where you have a Stan Druckenmiller market. People just come in and they say, listen, I've had it. And then so do we revert to 2018? In October to 2018 to December? I think no. I think what you just said is true, which is that Powell looks and sees if there's a lot of damage, he lays back. But the tenor of the market is very angry. So anytime you see the futures up, you know that there's sellers. Like last night, Dom Chu was talking this morning on the 5. It was really great. He was talking about how much the market was down at 1 a.m. and 2 a.m. Joe, we know this is ridiculous. 1 a.m. I mean, what are people so desperate to sell at 1 a.m.? What do they know? And the answer is nothing.
Right. You've seen
but
that.
You've had great guests this morning. Great guests. And the guests are really saying, be careful.
Yeah. Beck?
Hey, Jim, how much of that is options activity, too? How much of this gets exaggerated because there's so much of that's happening on puts and calls?
Well, I think what's happening is you've got a lot of people who do options, a lot of people do ETFs, and there's not enough time to have bids build. I mean, I think there's a lot of people who are trying to buy something well above where the sellers are willing to sell because they're automatic. And so you have this kind of weird imbalance. We used to actually see it more. There'd be someone, let's say, bidding 34 for a stock, but the machines are willing to sell it at 31. So they cut right through 34, and there's no bid underneath 33, 32. Next thing you know, the stock's 31, and no one's down there to be able to buy it because it happens so quickly. The sell programs are overrunning the buy. We've seen this happen a couple times in our careers, and it doesn't mean that stocks are bad. It just means you should be a little bit more prudent and don't bid so close, and don't pay attention to what the futures are doing. Pay attention to what you like. And they're going to get you a great price for what you like. American Express at 169 the other day. Thank you very much. We have a lot of stocks that literally you can get them for far lower than they should because the machines are obliterating them.